So if you're like a lot of our clients, you assume that all mortgage rates are relatively the same. A lot of clients go back to the folks that they bank with, or they go back to the mortgage loan officer that they bought their home with or got their first mortgage with. And today I'm going to share with you why that may not be the best strategy, especially if you're getting a jumbo loan. Jumbo loans are loans with balances in excess of $726,000. We are seeing these more and more frequently as home prices have risen dramatically over the last couple of years. When you look at interest rates on these jumbo loans, they vary a lot more than your traditional non-jumbo product. And today I'm going to dive in and show you why and how we help the client save almost $1,000 a month in interest. So the first thing that you may find pretty interesting is that jumbo loan rates have actually been trending lower than non-jumbo rates for the last few months. And I'm going to show you this calculation here. This is using Google search of just general mortgage rates. Again, these typically are these rates are higher than what you can actually find in the marketplace. So looking at a $700,000 loan amount, you're looking at a rate of 7% on average according to Google. When you jump up to $800,000 and more, you'll see that rate drops pretty dramatically to below 6%. We have a client that just recently, they were getting a jumbo loan. They went back to the loan officer that they were originally mortgaged through on their first time home purchase, and that was a sub-jumbo product. And now they were upsizing and they're getting into a jumbo product. We were absolutely shocked to see the rate that they were quoted from this loan officer, and know that jumbo loan rates can vary dramatically. And this was a nearly $1,000 a month change in interest to their payment. So they were absolutely thrilled when we were able to point them in a different direction. And sometimes this involves asking some questions that can make clients feel uncomfortable. Things like, where are your investments held? Where is your retirement held? And things like that. Merrill Lynch with Bank of America and Wells Fargo, they both offer programs for if you do hold assets with them, if you hold advisory or brokerage accounts with them, you can honestly save beyond what the published rates are. So you'll often see a published rate on Wells Fargo on their website for jumbo loans, and we've seen them come in even 1/4% or 3/8% lower than those published rates if there is a brokerage relationship or other kind of banking relationships that are there. So looking at these rates on Wells Fargo's website, which is a great tool to look for jumbo rates. I'm gonna give away one of our secrets. The big banks, we tend to like to bank local, but the big guys like Wells Fargo, they really do have a killer jumbo loan product. Looking at what they're publishing today on the 30-year fixed, they are offering a jumbo at 5.25. 5.25 is a pretty stellar interest rate. And again, depending on the relationship you have with your individual banker and with your investment advisor, if you hold stocks, 401ks, things like that with Wells, you may even see a further improvement on that rate. So talk to us, let us know, talk to your agent, let us know what you have going on. We can best point you in the direction as that goes. Looking at the 30-year non-jumbo rate, we're at sub 6 today, which is awesome to see again. And the rate that our clients were looking at, so again, 5.25 on jumbo, and we look at a rate chart that I just received from another bank. I've cropped off the bank's name here because I don't want to throw anyone under the bus, but their jumbo 30-year fix is at 7.125. So that's almost a 2% change in interest rate, which is absolutely massive. And I want to show you what that does to payment. So these particular clients were looking at bear with me, we're looking at a $750,000 or approximately $750 loan amount. They were putting down 20%. They were sub 1 million on their purchase price, just under $1 million. And so they were looking for about a $750 loan balance. At 7.125, if they went with that first or that second rate sheet that I showed you, that would put their monthly payment at just over $5,000 a month. Going with our bank or Wells Fargo, getting them a 5.25 is $41.42 per month. Again, almost $1,000 a month in savings for the life of the loan, for however long you own the home. You look at that over 360 payments, and that is over $350,000 that we save them by pointing them to a better loan officer. So be sure you're really shopping and understand that all loan products are not universal. There is a difference, and it definitely pays to shop and chat with your agent.